What is up, everybody? It's Current of the Crim Investments and Wellness back at you again with another video. Yeah, I've been absent. I've definitely been absent. Um, but like I said, I appreciate all of y'all rocking with me. That's still here to this day. I'm about to be dropping some more. A lot. I'm trying. I'm gonna stay. I'm gonna try to drop at least one video per week, 1 to 2 videos per week. I'm gonna shoot for two, but at least one. I need to start uh, back to just giving value to the community, man. But I've been gone, just really going on a social media break, to be honest. And also just to fix some of the flaws within my trading that I was having within my own trading. Really digging deep within myself, reading more psychology books, and really just honing in on my craft. But I'm back, and I'm ready to add more value to who all that need it. And Like I said again, I appreciate all y'all rocking with me. I really do. I really do. I appreciate all 613 subscribers. Let me look right now. Yeah, 613 subscribers. I appreciate all y'all rocking with me. And like I said, I'm sorry for not posting any videos. Like I said, just doing some work on me, so I can give that value back to y'all. But with that being said, as y'all can see with the title of the video, it is called Finding the Daily Bias. So let's go ahead and go to the daily chart. Alrighty. So I know this was my issue for a long time, and other people's issue that I've been hearing. But essentially, once you get a bias on where the day is going, you can form your trade and your entry a lot better once you have a bias on where the market's going, and then that takes out 80% of the concern if you know or have a bias of where the market's going. All right, and looking at daily highs and daily lows is going to tell you exactly where or how you can find this location to get active into the market, because essentially you want to just look at where liquidity is sitting and where liquidity will magnetize price and draw it to that area. Okay, because a lot of people have set areas where they want to get out at, but you got to look at it from a liquidity standpoint. Where is the liquidity in the market, and you must take partials at that liquidity point, because it can easily go to that liquidity area and reverse it into another area. But back to the topic at hand, sticking to the daily chart. So as you can see here on the daily chart, just off of this, you can see we're in a downtrend. This is GBP USD. So let me zoom in real quick. So as you can see here, let's just go to the last daily high, daily low. So this is the daily high, low right here, and this is the daily high. All right. So this candle opened right above this last previous daily low. All right. So what it did was it came back in and filled in this imbalance right here to take out this daily low, and then it just tanked. Probably with CPI news and everything that's going on into the market, we've seen this big volatility that pumped into the market. This is one candle. This took up what, 1, 2, 3, 4, 5, about 5 days, a week's worth of trading in one candle on a Friday. That's crazy. But all right, so I'm gonna keep going, just back testing, a little back testing session, so you don't just think, I'm speaking nonsense. I want to show you that this happens all the time. All right, so previous candle. So as you can see here, daily low, daily high, same thing. Since we're in a bullish trend, we can already kind of suggest on a bigger time frame, we can suggest that it will come back in, fill some of this imbalance, and take out that daily low or high. So go to the next candle, here, here. Okay, so it did not take out any daily low or high here. However, with trading, nothing is 100% in trading. If it was 100% trading, everybody would be profitable. So never get down on your strategy if it's not working all the time. It's not supposed to work all the time. You know, that's it. The only thing that we can control is risk to reward. That's the only thing we can control. So put the attention on that. But as you can see here, it did not happen. Within the last 3 times, this one time didn't happen, which is still a very high probability. So let's go to the next candle. As we can see here, swept all this liquidity down here, this previous daily low, and then went up and swept the daily high. So it does that as well. It can sweep both the daily low and daily high. All right. And I'm gonna just do one more candle. You know, why not? All right. See, opens right here, barely sweeps that daily high. I'm talking about barely sweeps it. Let's go down to a smaller time frame. Barely sweeps it right there, and then continues on this bearish pattern. So essentially, it's going to sweep the previous daily high or the previous daily low. Always, it is always going to do this. So once you once you get the daily buys, so you always want to work every day when it comes to the charts. That is exact. So once the next daily candle prints, I'm going to go ahead and just do it right now. So this next daily high, wrong tool. Right here, next daily high and daily low. All right, so we'll see. So this candle's gonna open up right here. So with my bias from everything that's been going on in the market, we can obviously see that we're bearish. You know, so there's no question that we're bearish, and we have this order block right up in here. All right, so with me already thinking that the market, or having the bias that the market's bearish based off of structure, based off of a liquidity point, in the means of a daily low. Go ahead and put that in. Daily low. Go ahead and put this as a daily high. All right, and we have an order block, but I'm not too concerned with this daily high, because of all this volatility that we had come in during New York session Friday. I would expect, I have a bias based off of, like I said, bigger time frame structure, a liquidity point being a previous daily low, and also a daily order block being right below this previous daily low. I would have a bias based off of those 3 things. This is a daily order block, so that's strong. This is daily structure, so this is strong. And we have a daily low with all this volatility came in from this candle. So I have a bias to go short based off of that information right there. So once you can combine different things to along with the daily high and low, you can then drop down to smaller time frames and can see that we have imbalance right between these 2 candles here. Right here, just go ahead and mark this up. Imbalance right in this gap. So what I would probably think to see is a run above what am I looking for? So I would expect a run above this high, liquidity sitting above this 4-hour high, into this gap. And once we get into this gap, I would expect the market to stutter around, break structure, sweep those highs, sweep that liquidity, break structure again. We have an entry right here to eventually take out this daily low, and even come further down into this order block. So this is my bias based off of those 3 things. Okay, so like I said, use that daily low and daily high to form your bias off where you think the market's going. And once you get that, you can add other things such as structure, such as order blocks, such as imbalances on lower time frames to narrow in an entry wait for your confirmations, whether it be a candlestick pattern or some kind of breaker structure to enter the market, and then now you have a bigger time frame liquidity point where the market will draw to. Okay, so I can go deeper inside of the lower time frame biases in another video, but I wanted to get the concept of the daily lows and highs and how it will always target one of them. What I'm not gonna say always, majority of the time it will target one of them. Okay, very few times where it consolidates and doesn't hit a daily high, daily low. Nothing's promised in trade. Nothing's of a sure thing in trading. So, but majority of the time, and you can like just go back and back test any chart. You will always see the daily high or low getting swept by that next candle. The previous daily high or low getting swept by the next daily candle. Majority of the time. I don't want to throw out a percentage yet because I haven't got all the way to that point where to back test all the way through a quarter or a week. Well, a week it's about 85% of the time, but I'm talking about quarterly. But I'd assume it's pretty high. But like I said, which is great probability. So if it's an 85% chance that it's going to sweep a daily high or low, and then you can drop down to a lower time frame and see how structures forming to go to that liquidity point, that already put you ahead of the game. All right. So like I said, I can go into a deeper video, but I'm going to end it there. Don't want to make these videos too long. Creme de la creme is out.